US-India trading relationship is increasingly the focus as India pledges to protect its economic interests, weakening concerns that Russian oil supply could see an immediate impact from secondary sanctions. Today, the Reserve Bank of India kept its key repo rate steady at 5.5%, in line with expectations as policymakers waited to see the impact of recent rate cuts amid all the rising global trade uncertainties. The Trump administration is reportedly considering new sanctions targeting Russia's oil supply and distribution if Putin fails to agree to a ceasefire in Ukraine by this Friday, but also news that Russia is weighing options for some kind of concession to US President Donald Trump that could include an air truce with Ukraine, leading to easing of prices. This comes amid OPEC Plus increasing the agreed production volumes in September by a further 547,000 barrels per day, also marking a full expedited reversal of the oil group's 2.2 million barrels per day voluntary cuts. The OPEC group cited decent summer demand and low commercial crude inventories globally as main reasons for unwinding further. Hello, welcome to Global Business Insights, where we consider the headlines moving markets in more depth. In this episode, we want to focus on updates on the outlook in the oil and gas sector in view of the Friday deadline on Russia and possible new U.S. secondary sanctions. Brent crude yesterday declined to under $68 a barrel. But first, some of the other business stories. The artificial intelligence trade is far from tiring as intelligence software company Palantir's sales rose to $1 billion, up by 48% year on year, also the 8th consecutive quarter of high growth. Palantir has benefited from the growing demand for intelligence and defense technology in a world of faster artificial intelligence assimilation, border closures, and superpower rivalry. But not all tech companies are doing as well. Snap yesterday reported second quarter revenue growth that was the slowest in more than a year, a sign of growing competition from bigger social media rivals, including Meta. Shares of the Snapchat parent plunged 15% after the bell. That's after the results came out. Tesla's board yesterday approved a staggering $29 billion share award for Elon Musk, aiming to retain him and address previous legal battles over his compensation. This raises his holdings in Tesla from 13% to about 16% and also boosts his voting power. The award indeed changes the game in C-suite compensation amidst efforts to resolve uncertainty surrounding Musk's future with Tesla while addressing declining sales and increasing competition, particularly from China. Notably, sales of Tesla's electric vehicles sank 60% in the UK last month amid a broader slump in European demand, with Chinese rival BYD surging in the same market. America's trade deficit fell 16% year-on-year in June to $60.2 billion, also its lowest level in nearly 2 years, as imports of consumer goods dropped sharply and the gap with China shrank by over 30% to $9.5 billion, its narrowest since 2004. Trump is also saying a new deal with China is very close. U.S. Services PMI, that's Purchasing Managers Index, that was in July, dropped to 50.1 from 50.8 in June, below forecasts of a rise of 51.6. Market sentiment still recovering after it soured as traders digested weak jobs data and balked at removal of the head of the Bureau of Labor Statistics. Also, a sudden resignation of Federal Reserve Governor Adriana Kugler also implies even more uncertainty, even as Trump says Scott Bessent is not interested in being nominated to becoming the next Fed chair. Meanwhile, National Economic Council Director Kevin Hassett and former Fed Governor Kevin Walsh, as well as the current Fed Governor Christopher Waller, have all been floated as leading contenders for the Fed chair job. The odds of a September rate cut by the US FOMC may also have improved given the weaknesses increasingly evident in the job market. Fed Reserve Bank of San Francisco President Mary C. Daly on Monday noted that there are plenty of reasons to start looking at interest rate cuts, though the uncertainty persists. All this, as Trump says, much higher tariffs could still be expected in the pharmaceuticals and semiconductor sectors, and these will be announced in phases. Switzerland's president and economy minister will also be traveling to Washington to present a more attractive offer in an attempt to reduce tariffs on its goods. Indeed, Wall Street seems stuck between good corporate earnings and a flurry of not-so-good data amid a lot of tariff uncertainty. The S&P 500 pulled back, albeit slightly, as traders digested weaker than expected economic data and the latest tariff comments from President Trump, stoking further concerns about the state of the US economy. Eurozone composite PMI for July also came in at 50.9, missing expectations of 51 and down from 51.0 in June. And in the UK, the S&P Global Services PMI dropped to 51.8 in July from 52.8 in June, as we saw the most significant decline in new orders since November 2022. Traders expect the Bank of England policy meeting. There's a 90% probability, that's on August 7, to lower interest rates by 25 basis points. This could be the fifth interest rate cut by the UK central bank in its current monetary expansion cycle, which started in August 2024. Markets will also be paying close attention to the monetary policy statement and the Bank of England Governor Andrew Bailey's press conference for signals on likely monetary policy action by the central bank in the remainder of the year. At the last meeting, the guidance pointed to a gradual and cautious monetary policy expansion. And in Taiwan, prosecutors arrested 6 people suspected of stealing trade secrets from Taiwan Semiconductor Manufacturing Company. This opens an investigation into a potential breach of national security involving a global tech industry linchpin. Industrial espionage seems to be gaining more traction in the unfolding technology revolution and race for the competitive edge. Now for more on the oil sector, U.S. oil majors ExxonMobil and Chevron both reported their highest ever production in Q2 2025 at 4.6 million barrels per day and 3.4 million barrels per day respectively. French Total Energy also saw higher hydrocarbon output over the year, but Shell's production declined by 4.2% to 2.65 million barrels per day, and BP also dipped by 3.3% from a year ago to 2.3 million barrels of oil per day. It was also a mixed report for oil giant Saudi Aramco, as it posted a drop in second quarter revenues, citing lower crude oil and refined chemical products prices, partially offset by higher traded volumes. Net Q2 income of 92.04 billion Saudi riyals, that's about $24.5 billion, was still slightly above $23.7 billion forecasted. Saudi Aramco has lost 14% of share value since the beginning of the year as investors digest lower dividend payouts in 2025 and increasing indebtedness in view of much lower oil prices. BP, the British oil giant, reported better than expected profits, which it credited to strong operations, also as it announced its biggest oil and gas discovery in 25 years in Brazil. The oil major is seeking to rebuild credibility with investors following a prolonged period of lagging performance relative to peers, and it also announced further job cuts as part of cost-cutting efforts. BP says it's launching a fresh comprehensive review of its business and costs, pledging that it can and will do better for shareholders, as a previous strategic overhaul seemed to have yielded little. Chief Executive Murray Auchincloss, in a recent interview with the Financial Times, added that the incoming chair, Albert Manifold, is hardcore focused on returns, value and efficiency. Still on oil, in Nigeria, a crackdown on oil theft may have boosted Nigeria's oil output, as the oil regulator NUPRC reported that crude and condensate production was over 1.8 million barrels per day in July. That's the highest production we've seen since April 2020, and that may have been as a result of intensifying efforts to get better incentives to produce, and of course this crackdown on oil theft and sabotage. In summary, lower oil prices dragged profits of oil majors down, with some able to offset that with much higher production, notably in the US, where the environment has been pushing for higher production to keep prices down and as such inflation. As margins tighten, oil companies are increasingly forced into more strategic and portfolio reviews to get the best returns and value for shareholders. Headcount reductions have not abated, as more costly oil basins are also being exited. BP said yesterday that 6,200 out of its 40,000 office staff, higher than previous estimates, would be cut this year, adding that there would be material incremental savings on payroll from the first quarter of 2026. But for now, the geopolitics remains the key issue, as markets closely watch the Friday deadline for Russia to agree to a ceasefire. There is much potential for more intense geopolitical volatility and tightening of supply if the sanctions are imposed. Japanese auto giant Honda's first quarter operating profits fell 50% year over year at 244 billion yen compared to 323 billion yen forecasted. This was due to US auto tariffs and a stronger yen. Some more data. Activity in the UK's construction industry fell at the steepest pace since the pandemic in July, as we got the latest PMI read coming in at 44.3, also significantly below estimates. The contraction was most felt in civil engineering and residential building, with firms mentioning site delays, lower volumes of incoming new business and weaker customer confidence. And in Nigeria, Q1 2025 total capital importation rose 67.12% compared to Q1 2024. That's to $5.6 billion US dollars, higher than $3.4 billion recorded a year earlier. In comparison, capital importation was up 10.86% from Q4 2024. This was mainly due to incoming portfolio investments, which tend to be volatile. That is, they come in and go out quickly. The more stable foreign direct investments, which have a better correlation with economic growth and employment, however, fell 70.06% quarter on quarter, growing 6% year on year to an inflow of 127 million US dollars. That is in Q1 2025. Asia Pacific markets closed mixed after losses on Wall Street, and as investors weighed latest economic data, looked at the earnings as well as fresh tariff comments alerting on coming tariffs on semiconductors and chips, which Trump says he wants to be made in the US. UK and European stocks seem to be extending their rally to a third day, shrugging off the tariff rhetoric. US futures also positive. We see volatile oil prices today rebounding from a 5-week low the previous day, as traders focused on impact of higher tariffs on India, that is over its Russian crude purchases, and also a larger than expected US crude inventory draw. Brent crude up 1.55% at close to $69 per barrel this morning. Well, that's it on this very special edition of Global Business Insights. This is Bode Oshosami.